exclusive warranty, the insurer will pay out to the buyer, and they will say, I'm not going to subrogate against the seller. This effectively limits the risk of the seller to the policy retention.
Thank you. When you, if you can stay on that parameter slide for just a moment.
Yeah.
One thing that we found over these last 10 to 13 years is that when you talk about the policy itself, and I think this would be in reference to the scope of cover and the exclusions bullets on your slide, 10 to 13 years ago, the policies were about an inch thick. So to determine exactly what was being covered and what wasn't being covered was rather difficult. Now the policies that are being written are much thinner, and it basically says we're covering the reps and warranties in the deal other than, and then it'll specifically exclude, as you said, the items that are not to be included in the reps and warranties. So they're much easier policies to understand than they were 10 to 13 years ago. Have you seen that as well?
Yeah, absolutely. And I mean, we often say it's as close to a financial guarantee in insurance as you can get. And the policies are relatively simple contracts, and they are accepted as alternative security in a number of cases, which I think just reflects the fact that they are simple contracts, very clear, and if there is a claim, then the insurer will stand behind the policy and make good the loss. So definitely I agree with that. Excellent.
And back up to the policy limit choice. When a client is making a choice on limit, have you seen any tie to policy limit to escrow on the deal?
Yeah, absolutely. And often the policy limit will be the escrow amount because the seller is using insurance to avoid an escrow. And we're seeing a growing number of sellers structuring their deal around insurance and managing to walk away on day one with 100% of the sale proceeds with nothing else wrapped up in escrow. So very much so, and that is often the limit that is chosen, either at the escrow amount or at an amount that the escrow would have been.
Right. Excellent. Thank you. Also, moving on, who are some of the insurance carriers you've seen with an interest in underwriting these products? And what is the process? So if I am a seller or a buyer and I want to look into this transactional risk insurance, how do I do this, and when do I get the insurance broker involved?
Okay, so in terms of the insurers writing this line of business, London remains very much the centre of this business worldwide. There are 12 insurers here in London. You've got the familiar names of Zurich, AIG and Chubb, as well as the more bespoke Lloyd's of London syndicates. So there's really intense market, and as a result, the solutions that you can put in place are very interesting. Just running on to the process. So what is required in terms of the underwriting? I think there's just a broad level comment would be the process has improved hugely. It used to be very time intensive and very obtrusive. That is no longer the case. The insurers have all hired former corporate lawyers who understand the process